Hi friends, I would like to bring an update regarding a company called Delhivery Limited. Uh, this is a logistic company that provides its services to various multinational companies and all over India. So today we'll share an update regarding an strategic partnership that it has agreed into with HPCL, which is Hindustan Petrochemical Limited. The current share price of the stock is 312. The stock has been on the downward trend since the last uh, 6 months. The last 5 days itself, the stock has lost about 8%. 1 month, stock is down 11%. And if you look at the 6 months trend, it's down 24%. So the current price of 312, the stock has been trading at about the 300 and 450, 470 levels in the last 2 years. Look at the year to date, it shows 36% down. If you look at 5-year trend, you can see since 2003, the trend has been between 300 and 470. So we'll quickly go through some details. The stock is not doing very well in terms of revenue and profitability. However, it's important to share the news of the uh, strategic partnership with HPCL that has been announced today. So, as you can see, Delivery provides a full range of logistics services, include delivery of express parcels and heavy goods, PTL freight, TL freight, warehousing, supply chain solution, cross-border express freight services, and supply chain software. So, company also offers value-added services such as e-commerce return services, payment and collection and processing, installation and assembly services. So we scroll down, market cap 23,000 crores, current price 313, highest 488, low of 309. 23rd of February, it was around 470 last year. So stock P 739. This is really very high. That means that the earning capacity of the company is very low, and the, accordingly the price of the stock is very high. So stock book value 125, return of capital is minus 1.73, return on equity is minus 3%, face value 1 per share. We scroll down this graph. We've already discussed the relevance of this graph. You can see here last year February showing 456. Scroll down, that means in the last 1 year the stock has lost 50%. Yeah, so stock is trading 2.53 times book value, has low interest coverage ratio, low return on equity of minus 11, which is means the company is not been making any profit, it's been losing money. Other income has 458 crores. So the main source of income uh, of the delivery and the logistics services, the company isn't making any profit. Whatever income that you can see here is generated through other means, which is subject to further investigation. You can check what could be the reason as to why this other income factor is coming in here. You can see stock P of other companies: Container Corporation 35, Transport Corporation 20, TVS Supply 218. Again, if you will see closely, TVS Supply would be another probably loss-making company that is probably irrelevant, or the market dynamics do not make it feasible for it to give a good return, or the business module is not very successful. So all cargo logistics, again a very high PE of 116, VRL logistics with a PE of 47. The price also doesn't seem to be too bad 454, which is a relatively good price. So we can compare the other companies compared to this. You see VRL has 10% return. Sorry, we'll scroll down. You can see sales have been stagnant since the last 2 years. The company has high expenses compared to the sales. So what the company probably needs is a boost in sales. Possibly the fixed costs are very high, so a boost in sales could actually improve the overall profitability of the company. You can see here in June 2022, it had a high of 600 odd rupees for the share price, and it has made losses, which is the reason why the consistently the share price has been falling. And if you can see minus operating profit until about September 2023. The last 4-5 quarters seems to be have a decent kind of performance. However, still even after having a positive operating profit, the company doesn't seem to be making any profit. You see depreciation, interest, and other issues contribute to uh, still negative profitability. So you can see only one quarter, which is June 2024, the company has 53 crore profit. September 2024, it has only 9 crore profit. So something for a cause of concern. However, having a strategic partnership with HPCL can boost the company's revenue and sales. So you can see here the sales are growing, however, along with the growing sales, the expenses are also growing. So there has to be some breakthrough where the sales increase higher in proportionate to its expenses. You can see the other income factor, which is showing here 400 crores, 300 crores, 439 crores. Interest is also pretty high. Depreciation, you can see depreciation amount is very high because of probably the vehicles, transport vehicles need to be written off as per the yearly depreciation estimates. So earnings per share is a negative. Compounded sales growth has improved, however, it's not sufficient to make the company profitable. Balance sheet reserves reserves are high. I believe all the reserves have been invested into the business. Borrowings growing year on year, which again is a cause of concern. Higher borrowing would lead to higher interest costs, and whatever little profitability that the company can generate would turn into a negative. Liabilities here 11,000 crores overall, including the reserves, fixed assets 3,700 crores. These must be mostly to do with vehicles and land and machinery, if any land, particularly not machinery. So cash flows, well, very high. I mean, that's something that you can have a look at. Ratios, data ratios are 64, relatively high. Working capital days has improved. However, uh, better performance in managing the capital would yield more profitable business. Shareholding pattern, here you go. FII is 53%, which is very high. Institutional investors 29%, public 17%. So the the base of this company is set by the foreign institutional investors. Probably they are making a loss, which is the reason why they still have a huge portfolio of investment. So this is something that needs to be looked into. Yeah. can go through the other basic details in the update of the press release that I've shared along with this video. Thank you for watching. If you have any feedback, please share through a comment. If you like the video, please share with your friends and family. Thank you. Thank you for watching.